The market is paying attention to something big in the technology sector right now. While most investors chase the latest artificial intelligence headlines and debate which graphics processor company will dominate the next quarter, a quieter opportunity is emerging in an unexpected place. The memory chip industry is experiencing a fundamental shift that has the potential to reshape valuations across the entire semiconductor landscape. Understanding the current memory crisis, the technology world is facing a supply shortage unlike anything seen in recent memory. Data centers consumed an estimated 70% of all memory chips produced worldwide in 2000, and this concentration is creating ripple effects across every corner of the electronics industry. Prices for standard computer memory have surged between 80 and 90% in just one quarter, while storage drives have seen price increases exceeding 100% in some cases. This is not a typical supply and demand imbalance that will correct itself in a few months. Something deeper is happening in the semiconductor industry, and understanding this shift reveals why one particular stock deserves serious attention right now. The driving force behind this transformation is the explosive growth of artificial intelligence infrastructure. Modern data centers running large language models and training next-generation systems require massive amounts of specialized memory. The fastest type of memory, called high-bandwidth memory or HBM, has become the bottleneck limiting how quickly the entire AI revolution can scale. Major technology companies have locked in their memory supply through 2028, leaving everyone else scrambling for remaining capacity. Manufacturers are diverting production away from consumer electronics and standard computer components toward these high-margin data center products, creating shortages that are expected to persist well into 2027 and potentially beyond. The company positioned to win, Micron Technology, sits at the center of this transformation. The company reported revenue of $13.6 billion in the first quarter of fiscal 26, representing growth of 21% from the previous quarter. More impressive than the revenue growth is what happened to the company's profit margins. Gross margins expanded to 57%, nearly doubling from roughly 2% just 2 years earlier. These numbers tell a story about fundamental changes in the business model. Micron is no longer primarily selling commodity memory chips with razor-thin margins. High-bandwidth memory sales now represent a significant and rapidly growing portion of revenue, and these products command premium prices with substantially higher profitability. The company has already sold out its entire HBM capacity for calendar year 2026. Customers are placing orders more than a year in advance and committing to pricing agreements because they cannot risk running short of this critical component. This gives Micron unprecedented visibility into future revenue and removes much of the cyclical volatility that has historically plagued memory chip manufacturers. The technology advantage: Micron recently began shipping its fourth-generation high-bandwidth memory, known as HBM4, ahead of schedule. This product delivers bandwidth exceeding 2.8 terabytes per second with industry-leading power efficiency. The company's chief executive stated that Micron's HBM4 outperforms all competing products from rivals while consuming less energy. This technological leadership matters because memory specifications are becoming increasingly critical to overall system performance. Graphics processors and AI accelerators are only as fast as the memory feeding them data. Companies building the next generation of AI infrastructure cannot compromise on memory performance, which is why they are willing to pay premium prices and secure supply years in advance. The manufacturing process for high-bandwidth memory is extraordinarily complex. Each chip consists of 12 individual memory dies stacked vertically and connected through thousands of microscopic interconnects. Getting to even higher stack counts of 16 dies requires advances in heat management and chip bonding technology. Micron has demonstrated it can manufacture these advanced products at scale, while competitors struggle with yield and production volume. The valuation opportunity: here is where the investment thesis becomes compelling. Despite reporting record revenue, expanding margins and selling out production capacity more than a year in advance, Micron trades at just 12 times forward earnings. Compare this to graphics processor companies trading at 24 times earnings, or other semiconductor firms commanding multiples above 30. The market is still pricing Micron as if it were a cyclical commodity business prone to boom and bust cycles. Investors remember the painful periods when memory prices collapsed and manufacturers lost money for quarters at a time. This historical pattern has created a valuation discount that does not reflect the current reality of sustained structural demand and pricing power. Wall Street analysts project Micron's earnings will surge to $33 per share in 2026 and climb further to $42 per share in 2027. These estimates imply earnings growth of more than 50% annually over the next few years. A company growing earnings at this rate while trading at such a low multiple represents a significant disconnect between price and fundamental value. Multiple analysts have set price targets of $500 per share, suggesting potential upside exceeding 20% even after the stock has already rallied substantially. The consensus rating among analysts who cover Micron is strong buy, with only 2 hold ratings among 29 total recommendations. The structural shift. Understanding why this opportunity exists requires recognizing how profoundly the memory industry has changed. For decades, memory chip makers competed primarily on cost and capacity for consumer devices, like computers and smartphones. Demand fluctuated with consumer spending cycles, and oversupply often led to brutal price competition. The AI revolution has inverted this dynamic. Data centers now consume the lion's share of production capacity, and these customers prioritize performance and reliability over cost. They need memory that can handle the enormous data throughput required by AI workloads, and they are willing to pay significantly more for products that deliver superior specifications. Supply growth is constrained by the time and capital required to build new manufacturing facilities. Bringing a new memory fabrication plant online takes several years and billions of dollars in investment. Meanwhile, demand from AI infrastructure continues accelerating faster than supply can respond. This creates what analysts are calling a memory supercycle. Unlike previous periods of tight supply that lasted a few quarters, the current shortage is expected to persist for several years. Manufacturers are prioritizing high-margin data center products over lower-margin consumer goods, which keeps overall industry supply discipline strong even as new capacity comes online. The risk factors: no investment opportunity comes without risks. Memory prices could decline if AI spending slows or if new manufacturing capacity comes online faster than expected. Micron faces competition from South Korean rivals, Samsung and SK Hynix, both of which are also ramping production of advanced memory products. The broader semiconductor industry remains subject to economic cycles and geopolitical tensions. Trade restrictions or changes in government policy could impact manufacturing operations or market access. Technology transitions always carry execution risk, and any manufacturing problems or delays could hurt financial performance. Some analysts worry that the market has become overly optimistic about AI growth, and that reality may not match the enormous expectations built into current technology valuations. If AI adoption disappoints or takes longer to generate returns than investors expect, demand for AI infrastructure could soften. Why this opportunity exists now? The combination of undervaluation, strong fundamentals, and structural industry tailwinds creates a compelling risk-reward profile. Micron is generating record profits with unprecedented visibility into future demand, yet the stock trades at a discount to the broader market and to peers in the semiconductor industry. This disconnect exists because investors remain skeptical that the current favorable conditions will persist. Memories of previous downturns make them hesitant to assign sustainable growth multiples to memory chip companies. But the shift toward AI infrastructure represents a fundamental change in end market demand that is qualitatively different from previous cycles. Companies building AI systems need memory more than they need additional processing power. The bottleneck has shifted from compute to memory bandwidth. This positions memory suppliers as strategic enablers of the AI revolution, rather than commodity suppliers subject to cyclical swings. Micron has also made strategic decisions that differentiate it from pure commodity players. The company is investing heavily in advanced packaging technologies and developing specialized memory products for specific AI workloads. This product strategy moves the company up the value chain toward higher margin, more defensible market positions. The investment case for Micron Technology comes down to a straightforward proposition. The company is experiencing explosive earnings growth driven by structural demand for advanced memory products. Despite this growth, the stock trades at a significant valuation discount to both the broader market and to peers in the semiconductor industry. As investors recognize that the current favorable environment represents a sustainable shift rather than a temporary spike, this valuation gap should narrow substantially.